Good morning and happy Friday to you. This is Buy Now, Sell Now on ET Now, and my name is Alex Matthew. With me is Cheryl D'Souza. We'll take you through the next 1 hour. We've got a great show lined up for you. But first, let's take a check of how the markets are faring as of now. It's another good start to to trade in the equity markets here in India. And in fact, you have the Nifty that's holding on to gains right now with gains of about 0.6% above the 14,800 mark, and that seems to be holding as of now. Breadth is actually quite supportive overall. Even in the broader markets, you have the gainers that are more or less double the number of losers. Of course, over the last half an hour or so, you've seen the market breadth tilt slightly little less in favor of the advances than they were maybe an hour back. A check of the sectoral indices will tell you that the auto pack is looking a tad bit weak today, but still it's down only about 0.1%, and that is on account of several stocks that had gained very handsomely in trade yesterday. Perhaps a little bit of profit taking being seen in today's session. Hero MotoCorp, Bajaj Auto certainly feeling the brunt of that. Among the other sectors, all of the others are looking quite good. In fact, you have the Nifty Bank that's gaining another 0.5%, but really the winner today continues to be the metals pack. It's gaining about 2.4%, and it's led, of course, by the steel companies, both Tata Steel and JSW Steel looking particularly strong in trade today as well. And finally, a quick mention, you should watch out for the flows data that will come out later this evening, because yesterday you had quite a surprising print. Foreign institutional investors turned net buyers after quite a gap in the last several sessions where they've been selling, and that's a significant positive. Cheryl, what are the key stocks that you've identified? Good morning.
Good morning, Alex, and happy Friday to you as well. A lot of stocks that are buzzing based on earnings report, and you touched upon the metal stock, so I will first talk about Tata Steel. That particular counter is at record high once again, and this is because brokerages have actually gone ahead and raised the target on Tata Steel by up to 60%. This is after the stellar Q4 earnings that they reported. Apart from that, you have SBI Live that is in focus, 4.1% equity block deal we saw this morning. CA Emerald has said that they've sold shares at 960 rupees per share. You have Tata Consumers, margins were below estimates, and that stock is under pressure. Morgan Stanley remains underweight on Tata Consumers. Hero MotoCorp, the results were above ET Now estimates, but you can see the stock that is down in trade today. P&G Health is bearing the brunt in today's trading session on back of weak earnings. Apart from that, PRAJ Industries buzzing on back of good earnings. UltraTech, HDFC is in focus today because they will be reporting their earnings. And Dabur is the other stock that is in focus because they will be reporting its earnings. And also, it's a part of our BNSN spotlight today. So let's see what what we are actually expecting from Dabur in the quarter gone by. Vinny is here to take us through with ET Now poll. Vinny?
Dabur is set to post its Q4 FY21 numbers. In terms of the numbers, we're expecting a good set of numbers coming in from Dabur. Revenues expected to grow by around 32%. Profits are expected to see a 55% jump on a year-on-year basis, while the margins are also expected to expand by 230 basis points. So margins expected to be coming in at 11.9%. In terms of volume growth of the company, the domestic volume growth is expected to come in at 37%, a very strong volume growth. Obviously, last time was a lower base as well, but a strong volume growth nonetheless for Dabur. Now, overall, we're expecting a robust growth coming in the healthcare and oral care segment as well as the personal hygiene care segment also is expected to see a good growth coming in for the company. Beverage segment, which was a bit under pressure, could also see a higher growth given that there's a low base coming in for the beverage segment as well. International business, we're expecting overall a 15% growth on a year-on-year basis coming in on the international business front as well. Now let's talk about margins. While we've seen that most FMCG companies, the gross margins have surely been under pressure due to the inflationary trends. For Dabur, we're not expecting much of pressure coming in on the gross margins for the company, mainly because they have taken a smaller rise in the price increase, which is going to be supporting the gross margins as well. And overall, the cost control initiatives also taken by the company will lead to a better EBITDA margin, and we're expecting a 230 basis point expansion in terms of the margins of the company operating performance wise. Other than that, the factors that we'll be watching out for: rural growth, how is the rural performance, any different trends seen, given that, cases are spreading in smaller towns and tier 2, tier 3 cities as well this time. While any other change or commentary coming in on the consumer preference towards more Ayurvedic and the natural space, as well as, growth in the healthcare portfolio and any new launches in the pipeline, are the key factors that we'll be watching out for from Dabur.
Much for that update, Vinny. Let's also take a look at Marico, because really the comparison that we're doing today is Dabur versus Marico, and of course Dabur has already Marico has already announced its results. Consolidated net profit has come in about 14% higher, 227 crore rupees. It's seen double-digit volumes, and that's certainly a positive in the domestic market, and that has aided. From operations grew by as much as 34% to over 2,000 crore rupees. Operating margin was a bit of a drag. It came in at 17.6%, and largely prices. There are a lot of
Right, absolutely, Alex. Like you mentioned, today's spotlight is on Dabur and Marico. Marico has already reported its earnings. Dabur is all set to report its Q4 earnings later today. And we will kickstart this discussion with both of our experts today. That is Kunal Bothra as well as Sharmila Joshi. Good morning, Kunal and Sharmila. Thank you for joining us on Buy Now, Sell Now. And like we mentioned earlier in the show, the spotlight today is on Dabur versus Marico. So Kunal, I'll come first to you. How are these stocks actually looking like on the charts if you do a comparison of Dabur versus Marico?
Good morning, Cheryl. Good morning, everyone. Both these stocks, Dabur as well as Marico, I think they've been holding on to or hugging on to each other's relative price levels quite smoothly. So what I've mapped up is the last one and a half odd year of chart patterns for Dabur as well as Marico. The blue line which you can see is the price patterns for Dabur, as well as the black line which you can see is the price patterns for Marico. Now, if you look at it from say from the March 2020 levels, where many of the stock patterns is sort of evened out, you look at from those kind of levels, Dabur was one of the stocks which managed to consistently outperform. You look at the relative price patterns. What is very interesting is not just the trajectory, but what is very interesting is the way in which these stocks have moved up. If you see comparatively, Dabur has tended to be more high beta stock as compared to Marico. It has gone through those very sharp periods of uptrend and sharp periods of contraction or downtrend as well as compared to Marico. So this was the large price trend for Dabur since the last 1 year. But what has happened, or what has changed in the last 1 month is that Marico has got back into that kind of a groove. So you can see the outperformance of Marico in the last 1 month, and you can see that black line clearly crossing above that blue line and with a very strong kind of an uptick. So that's where the outperformance of Marico is coming by. So net, when you look at it for the last 1 year of comparison, both these stocks have tend to do pretty much very similar to where they are. But right now it seems that Marico is getting the bit of an edge in terms of Dabur, and it's finding that right degree and the right timing of momentum at current levels.
Okay, there you have it on the technical charts. At least Marico seems to be the winner between the two counters. Let me also bring in Sharmila Joshi. Sharmila, thank you so much for joining in. Good morning to you and happy Friday to you. What do you have to say with regard to what you've heard in terms of the earnings so far? Of course, we're anticipating Dabur. But which, according to you, stands out and why?
In terms of earnings, as you said, we've only really seen Marico's numbers, and Dabur is expected. But Marico had a great set of numbers, and little bit of a mixed bag because the margins weren't quite what analysts were penciling in. But I think in the given circumstances, this is a fairly solid set of revenue growth and profitability that they've delivered. And what is more exciting, of course, for Marico is the fact that the food business that they've now gotten into could be a driver for them going ahead. So, if you get into a new business line and then that starts contributing to revenues, that is always very exciting. To compare both the companies, my preference would be towards Dabur. And I'll tell you why. I think, they have a much better and a much better wider sort of a product portfolio in place than Marico. So Marico, of course, has come a long way. I mean, it started out as a sort of a hair oil company, and it's grown, its brand from Parachute to Saffola. Now they're into oats and the whole healthcare sort of business. They've done an acquisition called Beardo. So they've gotten into various other segments, and that has obviously contributed to their numbers, and we are seeing that play out in their price as well. When you look at Dabur, of course, you see that they have always been across a better product portfolio. And what's exciting for Dabur, I tell you, has been the fact, as per me, is the fact that, when Patanjali launched, everybody thought that it would be a big sort of a deterrent for Dabur because, they would be going head to head in many categories. But when somebody really that big comes and they start advertising and they start, talking about the virtues of having, Ayurvedic products and nature and natural toothpaste, etc., it actually broadens the market. And we've seen that play out really well for Dabur over the last 2 or 3 years. So whether it's honey, whether it's the toothpaste, whether it's the whole range of healthcare products that they've launched, those have been very well received by the market. So I think that's where the strength lies, and the fact that they're launching newer products and they have a very well-established sort of a distribution and marketing setup already. So that's, I think, where the edge for them comes over Marico. But definitely, I think, I would agree with what Kunal said, that probably in the near term, Marico could outperform because market is really excited about this new opportunity opening up for them because of the food business.
Okay, the final point then, Sharmila, very quickly, because then we'll head into a break, is that which according to, so I'm getting a sense that you prefer Dabur, but is the valuation the primary concern? And would you say that it's still going to be, for somebody who's entering for the next 5-10 years, it's something that you can still do?
Yes, and I think valuation-wise, there's really not much to choose between the two, but it's just because of their product profile and the outlook going ahead that I prefer Dabur over Marico.
All right. On that note, let's take a very short break. On the other side, of course, we'll get you the high risk and low risk ideas from our experts, and we'll also launch the query segment, which I'm sure a lot of you are looking forward to. Be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and on to the high risk and low risk ideas from our experts, starting with Kunal. What are your ideas for viewers today?
Well, two buy calls, expecting that the stock specific move for many of the sectors as well as for many of the individual stocks, they would continue. So two buy calls. First one, which I'm suggesting, is about Bharti Airtel. Now, after quite some time, we are discussing Bharti Airtel on the bullish side. I think it's given a classical breakout about this 560, 565 hurdle. It's a triangular pattern breakout, a bullish flag pattern breakout on the hourly charts, as well as I think there is a slight degree of outperformance, which is surprisingly coming in for Bharti Airtel after quite some time. So I think on the backdrop of it, with slight, I would say staggered, but consistent, almost a consistent kind of momentum coming in for Bharti Airtel, I would expect that the stock should move up to at least a level of 600 over the near term. So buy with a target of 600, stop loss to be kept at 540 approximately. And the second stock is about UBL, United Breweries. I think it's a very, very interesting chart. On the intraday time frame, that's on the 60 minutes chart. It's forming a classical bullish pennant formation. The breakout for this pattern is approximately 80 rupees on the upside. So I'm expecting somewhere closer to 1270, 1280 is where the stock should be heading in the very, very near term. Buy with a target of 1280 approximately, and stop loss could be kept at 1170.
All right. Thanks so much to everybody who's tuned in and live. We'll be starting the query segment very soon. But before we do, Sharmila, what are your high risk and low risk ideas? And we can keep it brief, because we're already seeing a lot of queries piling up.
So my low risk idea is HCL Tech. We've seen the numbers, and I think a couple of weeks back we had this as a query on the show, and I'd said that buy it post numbers. So numbers have been announced. They are the numbers are not too great, but the outlook is very strong going ahead. So I would buy this stock now with a target of close to 1200. My high risk idea is Tata Consumer Products. We've just seen the numbers, and the numbers were a bit of a miss, and we have seen that exceptional loss, etc., play out for Tata Consumers. So given that, the stock will correct a bit, and I think this correction will give us a good opportunity to buy the stock. here my target would be, you could expect a upside of about 10 to 15%. So those would be my two ideas.
All right, thank you for those ideas, Sharmila, and keeping it really brief also. All right, let's kickstart with our query segment then, and let's bring on board our first viewer query, and this is from Manoshi Gupta, saying that's purchased graphite at India 50 shares at 752 rupees per share. Wants to know the technical view on this particular stock and whether at what level should he look to add more of the stock. Kunal, what's your view on Graphite India?
I think you've bought at the exact current market price of the where the stock is trading right now. It's been a fantastic last 3 quarters for metal names, and for the commodity stocks as well. Graphite is one of the stock in a similar category from a level of 180 to 100. 3 quarters back, the stock has come back to 750, 800 levels. Its lifetime high is 1100. So if the trend is here to sustain for stocks like Graphite and I think it's immediate pure HEG, then both these stocks, they can see another round of upside, say closer to around 250 rupees on Graphite. That would be approximately 30-35% from current levels for the stock. So I would suggest a hold, but provided there are two important catch over here. One is that you are able to digest high beta volatility or high volatility action into these kind of names, because the stock has a tendency of going to 10-20% on the upside pretty smoothly, and even going through a very similar corrective phase on the upside. And the second important point is that you are ready to hold on to it from a slightly medium term to long term view. I think if both these criteria are set, then you can hold on for at least a target of 1000 plus on Graphite.
Okay, the next question is coming in from Shubh Mathur. Shubh has gotten into AU Small Finance Bank, and I think at slightly elevated levels of 1,178. The stock is currently trading at around 930, and therefore he's incurring a loss at this point. Sharmila, coming to you on this one, he's asking whether he should average at this point or book losses. Are you convinced about the business model of AU Small Finance Bank? Would you say that he should stay invested?
Yes, I think he can stay invested, but I am personally not in favor of averaging. And the stock price had corrected. It had its own set of reasons to correct. But the kind of numbers that they've delivered, as well as the outlook going ahead, would make me think that he can stay invested in the stock, because I would expect the stock to rally from current levels. So my advice would be to hold.
All right, our next query is an email query coming in from Babu from Bangalore, saying that he's holding on Mobile Global. The quantity is 800 share, which he's purchased at 112 rupees per share. He wants to know what sort of a target can he look for in the month of May. Kunal, how are the charts looking for on Mobile, and what sort of target can he actually look at?
So I think my sense is that he's looking out for very short-term kind of targets. If he's looking at what the stock would probably do for the month of May. For last 3 months, I think the month of March and April, the stock has been absolutely sideways. The good part about the chart is it's holding on and hugging on to the 50-day moving average. So I think at current levels of 102, 103, it's just about nudging towards or touching towards this 50-day moving average. This apparently has been a good support for on Mobile on the charts in the near term. So we can expect that the stock can hold on to this kind of support level. So you can hold on to it. But my sense is that maybe the stock would remain sideways, maybe rally up to 108, 110 levels. But it's not showing any kind of a great volume pickup. So trends may start for on Mobile, maybe over the next couple of months. So you have to be a patient investor if you're looking at, reaping some good rewards on the stock price. And if time frame is at your convenience, then I believe you should look at least 3 month to 6 month kind of a time frame for the stock to really justify the breakout in the volume patterns which it had shown in the month of February. So if your time frame is long term, say medium term, 3 months to 6 months, then I would suggest hold on Mobile.
Okay, I want to come back to you on this one, Kunal. We've got an interesting question from Sahil Mathur. And what he's asking is, why is Reliance behaving a little differently from a large number of its blue chip peers? And perhaps you have an answer on the charts, because it has displayed a bit of weakness since its earnings not too long back, right?
Absolutely. Alex, in fact, just a week or two back, before Reliance was scheduled to come out with its quarterly results, I was mentioning this pattern for Reliance Industries as well on the channel as well, that how the stock has a tendency of rising up, rallying up, some 7-8%, 100 odd rupees, 120 odd rupees, just prior to its results, and post its results, you see the stock going through a corrective phase. So I think it's not a different pattern this time around as well for Reliance Industries. Now the question is that when will this underperformance end? I think it's anyone's guess. When will this underperformance end for Reliance Industries? But then it's a quality blue chip name. So at times for a quality blue chip stock, time is something which has to be considered, and patience is something which is very, very important and required. So one can it's difficult to anticipate when that breakout will happen, but I think if one can hold on to it from say a couple of years of perspective, then I think buying Reliance Industries at 1900 levels, 1900, 1940 levels where it's trading, I think is a fair price to buy the stock. Given that kind of a time frame, I would expect the stock to retest that 2300 levels over the next 1 to 2 years.
Query is coming in from Pranav Dangi, saying that he wants to know whether he should buy care ratings for the longer term at current levels. What's your view on care ratings, Sharmila? The stock has definitely seen a good performance over the last 1 month, but for the longer term, how does care ratings actually look for an investment?
Yes, if it's an investment and it's a slightly longer term investment, then definitely this is an attractive price. And as you said, overall, I think going forward, the numbers are expected to be better. And I think what we must keep in mind is that all the sort of developments that we've had over the last couple of years seem to indicate that rating agencies will have a greater role to play going ahead. So, business prospects also for rating agencies seem better. So yes, I think he can go ahead and buy it, but the only caveat is that he needs to be a long-term investor and wait for things to sort of unfold from here, and then the stock will give him good return.
Okay, the next question is on the liquor stocks really, and we've got a question from Sagar on the technicals of it. He's mentioned United Spirits, but I think I'll expand it to the rest as well, Kunal. On the technicals, which should one pick?
Well, I will go with UBL, United Breweries. I think it's a much more better stock in terms of prospects, pure chartically and pure technically. I think I will probably give that stock I would say slight better advantage as compared to United Spirits. So United Spirits is a quality stock. It has a very good longer term history, but somehow the last 3 months, I remember specifically just prior to budget 2021, that was 3-4 months back, I think just prior to that is where the stock lost its way from levels of 660, 665. It had went through almost 100 rupee, 140 rupee correction from those levels, and somehow it's been unable to lift off from those corrective phases. But UBL, on the other hand, I think has been showing a lot of promise. It's trying to break past about a lot of the technical patterns time and again, converting the short-term rallies into trends, into decisive trends. So those are ingredients of stocks which form classical uptrend stories. So I would give UBL more strength as compared to United Spirits. I think if you're looking at it something from a momentum perspective, then you can expect at least a 10% upside from current levels on the stock price.
Our next viewer query is from Sri, saying that he's bought 25 shares of BASF at a price of 1,814 rupees per share. Wants to know what's the view on BASF over the short, medium and longer term as well, whether he should continue to hold on to this particular counter or look to book profits at current levels. Sharmila, what's your take on this counter, BASF?
BASF. Is that right?
Yes, BASF.
Yeah.
BASF
So this is a stock that I do like, and this whole space is actually doing fairly well. So I think if he's a longer term investor, he can definitely stay invested. And so for me, it's a hold at this level.
Okay, coming back to you on this one, we've got a question from Rajiv, and he's a long-term investor. He specified that at the onset, Sharmila. He's got 55 shares of IndusInd Bank at levels of 1450. He's asking whether to hold or exit because he's considering switching to stocks like CDSL or MCX or CAMS. Would you suggest that he hold on with a 5-year plus perspective?
The stock at this current price, definitely he can continue to hold. But, in that list of stocks that you were reading out, I do like CDSL as well. So that is definitely a stock that he can also consider. But yes, I think if he already has bought IndusInd Bank and he wants to continue to hold it from a longer term perspective, then definitely he can continue to hold IndusInd.
All right, our next query is coming in from Seems Kumari. He wants to know whether it's a good time to buy Bandhan Bank at current market price. What's your take on Bandhan Bank, Kunal?
Not attractive as such. I think it's been an underperformer. When you try and compare the list of private sector banks and then you try and look at the large cap ones, the mid cap ones, Bandhan Bank falls to be amongst the mid cap stocks and the ones which are amongst the low performers. So you look at it, in the last 4-5 months. That when large cap names like ICICI Bank, etc., they've corrected 15-20%. They've shown signs of bounce back quite strongly. These stocks have managed to just about hold on to their 200 moving averages, but Bandhan Bank has been reeling below its 200 moving average, I think, since the last 1.5 month. Let alone the downward pressure the stock has seen from those 420, 440 levels, which is very, very recent over the past 2-3 months. So it's been a stock which is showing signs of weakness. I would suggest that maybe some bit of pain is still left into the stock price on the downside. If you can wait for another 5 to 10% correction in the stock price, I think then it becomes an attractive buy, not at these levels.
Okay, I'm going to take the next question from Sagar, who's an old-time viewer. Thanks so much for joining in, Sagar. Always a pleasure to take your questions. He's got 1,000 shares of Lupin at levels of 1,040 and 1,000 shares of Sun Pharma at levels of 600. He's looking at possible levels of 1,400 for Lupin and 750 for Sun Pharma. Kunal, is that possible on the charts?
Possible for both of these stocks. They were big underperformers as compared to the other pharma majors, and I think it's time that many of these pharma stocks would probably try and cover up the stronger degree of underperformance which these stocks have shown. Typically, when a sector moves, the first move of the sector is led by solid quality large cap names. Then comes the mid cap stocks where there is a lot of anticipation that these stocks can give beta. And when the market gets exhausted with these kind of names is where you see the underperforming stocks, whether it's the large caps or the mid caps, even they find their own spate of rally. So I think Lupin and Sun Pharma have been relative underperformers as compared to the other large cap peers. But I sense now that the underperformance is getting covered up. And in that aspect, you might see another 10 to 15% rally in both of these stocks. So possibly your target range on 1,400 on Lupin and 750 approximately on Sun Pharma should be achieved.
All right, our next viewer query is coming from Parveen Kumar Bharadwaj, who wants to know the view on Make Money Organics is what I'm gathering from his basically message on YouTube. What's your view on this particular counter, Sharmila, Make Money Organics?
Yeah, this is a counter that I've been tracking for a fairly long period of time, and we've really seen it take off over this last year or so because of the whole China plus one playing out for chemicals as a space. So now I think they're a fancied part of a fancied sector, and they are seeing we are seeing that play out in their stock price. So yes, it's a stock that I like, and definitely I think he should stay invested.
Okay, we've got AB on YouTube who's got Symphony at levels of 1,111. Kunal, he's asking for a short, I'm assuming AB is a guy, is asking for a short-term view, about a month.
I think from a short-term view, I would suggest that the stock may remain in a range. It's not done much in last 2 months. In fact, has gone through a downward drift from 1,500 to 1,100. 1100, 1110 where it's currently trading right now. So it has very good support at 1,060, 1,080. So it's just about nudging very close towards its support level. So what could possibly happen, I would sense that it may try and test its support level. It may spend some time over there, and once demand comes in back again, you might see the stock coming back towards that 1150-1200 zone. So I sense it may just about remain in a range 1100 plus or minus 40-50 rupees for the good part of the next couple of weeks.
Next viewer query is coming in from David John, and he's asking whether it's good time to enter IT sector, especially companies like Oracle Financials, given that significant revenue of the company comes from outside the country. Sharmila, I'll pose this question to you. IT space, definitely global economy is recovering slowly and steadily, given that some of the countries are actually reopening post their COVID wave. So does it make sense to invest in companies like Oracle Financials?
To just comment on IT as a space, I think very many times on the show I've said that the two sectors that I like the most are IT and pharma. So yes, IT is a sector that you should look at. Now, unfortunately, OFSS is not a stock that I track too closely. My favorites are HCL Tech, TCS, Infosys in that order among the large cap. And among the smaller companies, smaller or rather mid-cap companies, there are a whole host of companies that I do like. If you want a really niche play, maybe you can look at a stock like a Tata Elxsi, given the kind of niche offerings they have across verticals. Another stock that I like is Persistent Systems. That could be a stock that you could look at. Zensar Technologies is another stock that I like. So I think there are a whole host of stocks. I'm sure OFSS is also, if he studied it and he's comfortable with buying it, then it's fine. But I personally don't track it.
Kunal, Tata Steel, clearly a stock that has been buzzing in the recent past, but Pawan Kumar is asking for a view on the Tata Steel May call.
I don't know which strike he is looking at, but if it's specific, has he mentioned any strike, Alex?
No, he hasn't mentioned.
Okay. So I'm assuming that he must have taken the position maybe yesterday or day before, when the stock was just about at 1080, 1100 levels. So I think if that's the case, and if you're slightly in the money with your profits on Tata Steel, then I would believe that these are good times to take out profits over here, or at least what at best you can do is, assuming if you're holding on to a call option on Tata Steel, then have cost as your trailing stop loss, or try and increase your trailing stop loss. The concern with many of these metal names is not the ferocity of the uptrend. The concern for many of these metal stocks is that in technical parameters, the RSIs are getting to an extremely overbought zone. So a level of 86, 88, 90 RSI on many of these metal stocks are being seen. So these are very tricky zones, because at these points of RSIs, there is possibility that momentum can continue and can accelerate. But if there is any kind of a reversal or any kind of a negative news flow which happens into these metal stocks, the sell-off could also be far more intense from these names. So rather than building fresh positions, I would suggest that have a trailing stop loss mechanism, and you can ride the uptrend till the time it lasts for many of these metal names, including Tata Steel.
The next one is for you as well, Kunal. We've got a query coming from Raghupati. He wants to know what's the entry price for PI industry. He wants to add this particular stock in his portfolio. Wants to know at what level should he actually go ahead and add PI industries. How are the charts looking for PI?
Very stable, quite attractive charts for PI industries. I think over the long term, it's done pretty well for itself. In fact, in the last 7-8 months, the stock has not even broken below its 200-day moving average. So that's the solidity of the trend for PI industries. Now, as a classic entry point, I would suggest 2,400, 2,450 as a good entry point. But the concern is that you might have to wait for a couple of weeks or at least a month or more, for the stock to come back to that attractive territory. So if patience is something which you can adhere to, then I believe 2,400 levels or thereabouts could be a good starting point for PI industries. And if you can hold on to it from a longer term view, then I believe averaging on every 200 rupee dip on the downside could again be a very good strategy.
Okay, this next question is for you, Sharmila, because I think Ankit defines long-term investor. He's been holding on to Godrej Consumer, he says, since the year 1990, and he's asking whether to hold or to shift to the metal sector.
He's holding it since 1990.
That's what he says.
I think he must be making a lot of money on Godrej Consumer, if my memory serves me right. So yes, I think he can, if he feels he's made a lot of money, he can definitely divest part of it onto metals, because that is sort of the sector that is trending. But honestly, I like Godrej Consumers, and again here, as we were speaking of, we've spoken of a lot of such names today. We've spoken of Marico, we've spoken of Dabur, I've spoken of Tata Consumer Products. So the stock which I liked for the longest time before Tata Consumer Products was actually Godrej Consumer. So here again, the kind of profile that they've built and their whole approach to taking their business to the next level has always been something that I've liked. So I would honestly stay invested in Godrej Consumer, but if I had additional flows, I would look to deploy that in Metro.
Next query is from Ritesh Garg. He's saying he's bought BHEL May call, but its put call ratio change from 0.5 to 0.47 has actually started to frighten him. Kunal, what's your view on this BHEL May call?
So, well, I think if I'm not wrong, the stock has just entered into the ban list yesterday, on the futures on the FNO side. So that may probably, lead to some, shedding of positions on the stock price. But if it's specific towards the May call option, then I believe you can hold on to your options over here. So even though the PCR ratio, the put call ratio has dropped, lower for BHEL, but I would sense that you have to try and mix up PCR or put call ratios, such derivative ratios, with some sort of technical breakouts as well, because technical breakouts is where the prices will probably get the first impetus on the move, and put call ratios will probably give you more of a supportive role. So I think for BHEL there has been good support at 55, 56 levels. So I think if the stock holds on to this level of 55, 56 for the next couple of days, you can expect one more round of breakout on the upside, and that could probably boost your call options which you're holding.
Okay, on that note, thank you so much, Kunal, as well as Sharmila, for taking the time for answering the questions that you did answer. I'm going to have to apologize to our viewers who've tuned in and who haven't had their answers given, because we are heading into a conversation with the management that is important to take right now. Thank you so much once again to the two of you for joining in. In fact, we are waiting on with Amit Agarwal, who's a Group CFO of Raymond. Thank you so much, Mr. Agarwal, for joining in. Just want to start by asking you, given the resurgence in cases of COVID-19, consumer sentiment has definitely been impacted. And would you say that you are back to where you started last year, given the localized lockdowns and restrictions that we're seeing right now?
So basically, if you look that the lockdown this time has not come as a nationwide lockdown, but it has come intermittently in various states. And if I look at in the cities which we operate, which is more than 600, there is almost like 70 to 75% of the places are practically on the lockdown. Whether it is somebody is having a weekend lockdown, somebody is having a weekday lockdown, but practically everybody is having a lockdown. However, if you look at the vaccination, with the vaccination drive, we believe this resurgence is there, and therefore the lockdown is there. But maybe after the vaccination gets dramatically improving, as the numbers of people getting vaccinated are improving, we see that it should start improving. Very clearly, if you look at it, that the second half of the last fiscal, we have seen a significant jump in our revenues, and the recovery has come back significantly. So we believe that once it starts to settle down, the resurgence is more tepid, then we would see again the demand coming back. Because there is obviously people want to buy, come out for shopping, and especially the weddings. And we are very big in weddings. So we have seen in our fourth quarter of last year that there was significant amount of sales happening for the wedding season and preparation for that.
Mr. Agarwal, a lot has been said about the virulence of this second wave of the pandemic, that it's much more infectious than the first wave. What has the impact been on demand in tier 1, rather in tier 2 and tier 3 cities?
So you look at it, that still, I would say tier 1 to tier 3 cities get classified more as one cluster. And if you see tier 4 to tier 6, though there are lockdowns and the cases are there, but still their operations are still better. When we talk about our stores, the TRS stores and the EBOs, we have seen that the people are still able to sell in those places, especially if people come in the morning, let's say between 8 a.m. to 11 a.m. people have been able to make. In certain states, they have also relaxed in the afternoon time from 4 to 6 also. So we have seen some sales happening in the smaller city, but bigger cities, obviously the tier 1 to tier 3 cities have been most challenging and mostly affected by that demand, as the footfalls have reduced.
Good morning, Mr. Agarwal. This is Cheryl also joining in. Let's talk about your operations. Given that we are seeing a lot of localized lockdown due to second wave of COVID-19, what's the current status of your manufacturing facilities and how many of your stores are actually operational as of now?
So if I look at it in terms of our operations, you see we are also exporting. So in places where we have a decent export order, because the fourth quarter did not witness that export sales that could happen because of the lockdowns in Europe and Americas, which is our core market. We are operating those facilities fairly well. And even in the domestic market also, because you see, we have a plan to produce and we may have some little bit of a stocking of the inventory right now. But we believe that the demand is going to come back as we have seen in the second half of the last year. So therefore, we are producing appropriately. But we are cautious of not going overboard and producing significantly at a higher level. But if I look at our engineering and auto business, there we are doing exceedingly well because in terms of the order book, both for the export market and even in the domestic market, we are seeing very, very strong order book. So there we are running absolutely full. In the lifestyle business, mainly where the textiles are concerned, fabrics, we have taken a little bit to cut. As far as the stores are concerned, you are right that at this juncture, anything between 25 to 27% of our stores are operational. Rest of the stores are, because of the weekdays or the weekend lockdown, they are not operational. However, if I take in the last year, we have taken as a cost rationalization measure, and you all know that last year compared to the fiscal 20, we have reduced our OPEX cost by 40%. So there we have closed down some of the stores which are not profitable to the tune of 150 stores.
Mr. Agarwal, let's talk about cotton prices. If you look at the prices, they've gained about 13% since the beginning of 2021. We've also seen some impact of that on your margins on some of the segments. Will this sort of impact even continue in Q1 as well?
Yeah, see, if I look at the raw material trend, so we as a Raymond group, we consume significant quantum of wool. And if you see in the wool prices, there has been an increase. But as we play into the premium segment, we have been able to push together some bit of a price increase. Similarly, in the shirting business where we use cotton, we have seen the price increases, but we have done a price increase recently in the month of March. And we believe as soon as the unlock starts to happen, we can put another price increase because there is a decent demand of our products. And that was reflected in the increase in the sales of our cotton shirts by almost 12% in the revenues compared to the last year of fourth quarter. So we believe that we will be able to pass on. Therefore, it should not impact our margins.
All right, Mr. Agarwal, obviously the wedding season is a key season for the company. And once again, we're likely to see a significant amount of turbulence. Have you seen any orders being deferred or cancelled altogether?
You know, what happens is people start to buy for the weddings starting from mid-April onwards. And we need to ship out our products right in the month of March, February and March. And when we saw the bookings coming in for the wedding season, we reached almost like 96 to 97%. And even if I see in the suitings business, which is primarily driven on the wedding, we were able to achieve compared to the last year more than 10% growth in the revenues. So clearly, people, the dealer network and all the wholesalers and the franchisee network have taken the material from us, and now they are in the process of selling those products. Obviously, there will be some lag for them because the weddings will be pushed a little bit out and the number of people who can attend the wedding are restricted. So that will have some impact on the secondary sales. For us as a mill, we have been able to achieve that sales, decent amount of sales, and delivering therefore 1400 crores of revenues in the fourth quarter.
Thank you so much for taking the time, Mr. Agarwal. Wish you all the best for the year ahead. On that note, we're slipping into a short break, but more on the other side, so do come back. Welcome back. You're watching Buy Now, Sell Now. Let's take a quick look at SBI Life. It's been buzzing off late, and in fact, there are reports of about 4.1% of the company in the form of equity shares exchanging hands in a block deal. As many as 41 million shares have changed hands in that block deal, which is thought to be worth about 4,000 crore rupees. A Carlyle arm, CA Emerald, held about 6% stake as of March 21, and that is the entity that is believed to be involved in that share sale. Let's move on now and talk about Mahindra & Mahindra, and of course, one of its key verticals, one of the two key verticals, is the farm equipment business. We caught up with the president of the farm equipment sector, Hemant Sikka, and we tried to understand the trends that are emerging in the rural economy, what the outlook for growth is. He remains positive on the growth outlook on account of the expectations of a normal monsoon. Here's a slice of that conversation.
The second lockdown is on a different plane compared to the first lockdown. Even though in the first lockdown we had very severe nationwide lockdown, this time it is more localized. So in a sense, the second lockdown is quite different from the first one. But before we talk about the lockdown impact on the rural business, let me just tell you a good point, first of all, a positive story, and that is that all the agri-related parameters still continue to be very positive. The Rabi harvest is going on very well. The procurement is on. In the month of April, because of sudden lockdowns, it was a little slow. But in the month of May, we have seen a very good pickup in the procurement. And the most important of all, the whole monsoon coming up very well. The monsoon is forecasted to be a normal monsoon, third time in a row by both IMD and SkyMed. And you know that for the rural economy, monsoon plays a significant part. So as far as all the agri-related parameters are concerned, they continue to be very strong and very positive.
M&M certainly doing well for itself in trade today, gaining about 2%. Tata Consumer, on the other hand, is not doing very well in trade. In fact, its earnings came out not too long back, and margins have remained under pressure, largely on account of a spike in domestic and international tea prices. Management of Tata Consumer, MD and CEO Sunil D'Souza, however, remains positive of a double-digit growth in the current financial year, and he says that margins will rebound once tea prices come down. Listen in.
As we increase distribution, as we strengthen our brands, as we drive innovation, very clearly we are targeting for high double-digit growth, profitable high double-digit growth, keeping costs tight and dropping that to the bottom line. So I would say double-digit is the norm. Sometimes you'll get significantly high double digits, sometimes you'll get low double digits, but that is what we're targeting. When tea prices come down, I would dare say that there will be a tempering of prices also. Again, it's a balance, but I would say margins should come back.
All right, Housing Development Finance Corporation, HDFC, the NBFC, is going to be reporting its numbers not too long from now. And the street is expecting a double-digit PAT growth in the fourth quarter. Poonam Sane is joining in to tell you exactly what the expectations are. Poonam?
Well, it's likely to be a largely stable quarter for HDFC Limited. In fact, we should be seeing the profits at nearly around 2,900 crore, which is a growth of nearly around 30% YOY. We should also be seeing a net interest income growth of nearly around 6% and a dividend income of close to around 110 crore during the quarter, with fairly controlled provisions, and all this would be leading to a high profit growth, along with, of course, the support of a low base. Having said that, the loan growth is likely to be fairly healthy, anywhere between 11 to 12%, largely led by good momentum in terms of the individual loan growth segment. Asset quality is seen largely stable. No major negative surprises are seen, at least so far. And also do note that the management in the last quarter had stated that they have significant amount of excess provisions, or total provisions of nearly around 12,300 crore itself. So from that perspective, it's likely to be a fairly stable asset quality. Also do note that we should be seeing the margins to be largely stable on a sequential basis, with a slight downward bias on account of the falling loan yield. In fact, management commentary in terms of the impact of the COVID wave 2 on disbursements and collection efficiency, overall asset quality trends would be fairly important, along with, of course, their commentary in terms of the demand in the housing loan segment. The stock is down 5% on a YTD basis and trades at 3.5x FY23 price to book.
Thanks, Poonam, for that update. Of course, HDFC Bank ahead of its results, up as much as 1%. You can tune in close to 3 o'clock, and that's when the earnings con call is expected to start for HDFC. Thanks so much for watching. That's all we have for you in this edition of Buy Now, Sell Now. It's been a pleasure bringing it to you. This is ET Now.